Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you one example of a morning gap trade from this morning that worked out picture perfect. You're seeing a sneak peek of it on the screen right now. However, before we get into the details of the specific trade, let me go over exactly what this gap trading strategy is all about. As day traders, we need opportunity. In order to find opportunity, we need stocks that are moving at the opening bell. Stocks that are moving at the opening bell create the opportunity we're looking for, the potential profit we're looking for, but the real opportunity lies right here. It lies with the traders that can identify a specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. So as a result, I teach traders how to do this through my course at LazyGapTrader.com. We learn exactly what criteria we're looking for. Which stocks does this work the best with? How much of a gap higher or lower in the morning are we looking for? What type of volume is required on these stocks to be considered for one of our morning gap trades? How do you trade them? What type of profit target are we looking for? What type of stop loss limitation are we looking for? How do you turn these trades into risk-free, emotionless trades, squeezing a whole lot of profit out of some of these trades while keeping risk to zero? And here's the holy grail, folks. The holy grail is, how do you calculate the specific price levels where these stocks will first be drawn to like a magnet and have that price reaction from in the other direction? All these things and a whole lot more are taught in the course at LazyGapTrader.com. Now here's the other thing I do, which is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Now this morning, we only had 4 potential gap trades on the board. Some days are better than others. Today, the market was relatively quiet. However, we did have 4 stocks moving at the open, and one of them did hit our price objective. Exact Sciences, EXAS. You'll see where I say gap higher. That means that we're looking to short the stock into a resistant price. Resistance levels are $62.50, $65.64. These are 2 separate and independent resistance levels from one another, which means these can represent separate and independent trades from one another. Stop and profit target is about 40 to 75 cents. These are minimum profit targets. I'll explain more about that when we go back to take a look at the chart of EXAS in detail. Speak of the devil, here's EXAS, but we're going to start out on a 1-minute chart because I want to show you exactly what happened and magnify it a little bit. So yesterday, the stock closed all the way down around $50. The stock was getting a tremendous boost higher at the open, so what we're able to do is identify the highest probability price level where the stock will first be drawn to and then have a price reaction from in the other direction. This is what's taught in the course, so you'll see what happened. The stock gaps higher at the open, trades right into the specific price of $62.50 and has a pullback. And the pullback was about 62 cents from the entry price. And you'll see that here because the entry was $62.50 and the closing price on this candle was $61.92. So the pullback was actually a little bit more than that. However, nonetheless, there was at least a gain of 62 cents. If you remember from the email that was sent out in the morning, the minimum profit target was 40 to 75 cents. It came right smack in the middle. But that's not all that happened. So the stock did go back higher and spiked through up above the $62.50 level. That happened after the trade was over. So we've already booked a profit and it spiked up once again. Now I've switched the chart over to a 5-minute time frame because I want to explain something that happened. By 9:45 in the morning, just 15 minutes after the opening bell, the stock was already at a low of $60.55. That's a tremendous gain in just a few minutes worth of trading if in fact any traders were to have hung on to the stock even through the spike higher above the entry level. Now that may be unlikely, but the point that I want to make technique is just to show you the importance of these levels and the type of reaction that we can and often do get from these price levels. So technically, we got the minimum profit target, or slightly more than the minimum profit target, on the trade within the first few minutes of the session. However, you can see what happened. The actual trade ended up giving us about $2 pullback from the entry, if not for the spike above 62.50, which A, most traders were already out of the trade, and B, most traders don't want to sit through a spike above the level to that magnitude. But nevertheless, it just shows you the importance and the power of these price levels. Now, if the stock continues higher throughout the day and comes into the second price level, and if you remember from the email, it's up at $65.64. If that should happen by chance, I'll be more than happy to take a look at shorting the stock once again. That would represent a separate and independent trade from the first one. Folks, we do this each and every day. Some days we get one trade. Some days we get 2, 3, 4 trades. It's very rare that we don't get any trades at all. This is a strategy that you can use for the remainder of your trading career. And I have to say, one of the most important things that traders learn by taking the course is the why behind the strategy. Once traders understand why this strategy works, why certain stocks are attracted to certain price levels, once they understand the why behind this strategy, it gives them an entirely different outlook and comfort level when entering these trades. Once you have a different expectation of what's likely to happen at these price levels, you have a different comfort level when entering the trades. You've removed a lot of the guesswork away from trading. And when you remove guesswork and add back in confidence, you change your trading for good. This is a strategy that you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.